Hello everyone. The British pound is back in focus after Prime Minister Keir Starmer announced his intention to step down, opening the door for a leadership transition within the Labour Party and creating fresh uncertainty for financial markets. Sterling weakened to around 1.3190 levels against the US dollar, extending its recent decline and trading near its lowest level in 3 months. While leadership changes are not unusual in UK politics, markets are particularly sensitive this time because the country is already facing significant fiscal and economic challenges. Britain currently has the highest borrowing cost among G7 economies, public debt remains elevated, economic growth has been sluggish, and government spending pressures continue to rise. Against this backdrop, the market participants are closely watching who will replace Starmer and, more importantly, whether the next leadership team will maintain the fiscal discipline. Adding to the uncertainty, Andy Burnham has emerged as a strong contender to become the next Prime Minister following his decisive parliamentary victory. Although he has pledged to respect existing fiscal rules, markets are waiting for concrete policy details before becoming comfortable with the UK's fiscal outlook. The bond market is sending a clear signal as well. UK 10-year gilt yields remain close to 4.85%, highlighting continued concerns about the government finances. At the same time, demand for sterling volatility hedges has increased, suggesting that market participants are preparing for larger currency swings in the weeks ahead. From the technical standpoint, on the daily moving chart, we can see the pair turning increasingly vulnerable. The pair has broken below the important 1.3280 support level and is now trading beneath its key moving averages. Price action remains close to the lower band of its linear regression channel, indicating that the downside risks remain elevated. In terms of key levels, immediate support is located between 1.3150 to 1.3200 region. A break below this zone could open the door towards the psychological 1.3000 level. On the upside, resistance can be seen between 1.33 to 1.3400 level, where selling interest is likely to emerge. Looking ahead, the outlook for sterling remains cautiously bearish. Political uncertainty, elevated gilt yields, and concerns surrounding the UK's fiscal position are expected to keep pressure on the pound. Unless markets receive clear reassurance on fiscal policy and economic management, GBPUSD is likely to remain vulnerable to further downside. Thank you and stay tuned for more updates.